Alright guys, so grab your torches, grab your flashlights, and let's continue our journey through the Twilight Zone. The biggest decoupling in modern history is underway, and we aren't just talking about trade. The US and Chinese financial sector are about to go their separate ways, and a lot of lucrative deals will be left on the table. Now, this isn't good, especially when Trump wants to deregulate US banks. Trump and Besson wants to unleash American capital to fund companies, especially those moving towards the US. Now, this is part of their three-pronged approach. He even confirmed the plan during the recent summit and a month before that.
The Trump economic agenda is more than the sum of its parts. Trade, tax cuts, and deregulation may be three distinct policies, but each policy is mutually reinforcing, and acting in concert, they push toward the same goal: to solidify our position as the home of global capital. This administration aims to give all banks the chance to succeed, whether it's JP Morgan or your local mortgage and loan. It aims to get capital to Americans who need it by getting bureaucracy out of the way.
But is the government really going to deregulate Wall Street and let them run wild? Now, something tells me this won't happen, especially when it comes to working on deals with China, which is an enormous market. A few weeks ago, US lawmakers told Wall Street banks not to work with Chinese companies to ditch helping them list on the stock exchange. Now, this is crazy because the listing isn't in New York but in Hong Kong. But US banks are desperate for deals, and the biggest names they are defying the lawmakers. Despite the warning, JP Morgan and Bank of America are sticking with the CATL deal. They need the company more than CATL needs them. Global banks in China, they are facing a very tough environment, big competition, especially during this trade war. Now, listing a company isn't some great endeavor. Many EU banks and local Chinese banks can do the same thing. And if JP Morgan and BFA walks away, they will turn their backs on a very, very lucrative deal. Now, investment banking is one of the core drivers of big global banks. JP Morgan themselves brought in $2 billion in revenue last quarter. And in this environment, if any companies wants to go public, Wall Street is hungry for deals. The CATL deal in Hong Kong will be the biggest in the world this year. It's an incredible deal worth $5 billion and is equivalent to all the US IPOs combined. Remember what CATL is? It's a major battery provider, not just to Chinese companies like BYD. US auto companies like Tesla and Ford, they all buy batteries from CATL. So the IPO isn't difficult to find buyers. Demand will be off the hook. It's an open goal for US banks, so they're all scrambling for the Chinese deal. Now imagine if you're JPM or Bank of America. You know the US economy is on its way to a recession. Domestic companies don't want to list at such a time because demand just won't be there. If stock prices are collapsing, the last thing investors want to do is to gamble their money with a new IPO. You want to look for deals in an economy that's growing where money is still flowing. In 2025, China is expected to ramp up their issuance of special bonds, and this is on top of their record fiscal deficit target of 4% this year. And Beijing can afford it because, unlike the US, bond yields there are less than 2%. We can see the monthly issuance of bonds rapidly rising, especially the more crazy Trump gets with his tariffs. So more money will flow to Chinese state-owned banks to lend to the greater economy, which means an economy that's still going to chug along and more companies looking to expand. The most successful ones will look to list because there will be investor demand. Money is leaving Wall Street and heading to the Hong Kong investment market. But it looks like future Chinese IPOs might not be looking to include Western banks. Now, whether this is from banks still afraid of US regulations or Chinese companies walking away, well, that's up for debate, but this isn't good news for the US financial industry. Chery Auto's IPO in Hong Kong is going to raise a ton of money, around $1.5 billion this year. But unlike CATL, it will be led by all Chinese bank roster. There won't be any involvement of any Wall Street banks. This is significant because it tells us how the financial landscape is starting to shift away from Wall Street. Now, without a doubt, US banks are still the financial leaders in the world. They have a stronger ecosystem that many countries need to connect their companies to access US investors. But if Trump blocks US money from investing into Chinese companies, Is there really an urgent need for Wall Street anymore? Chinese giants looking to IPO will simply use local banks. Once again, US policy is screwing up their own industries. US banks are facing Chinese rivals that can offer cheaper advisory, financing, and other investment banking services. In an IPO deal, that can translate to hundreds of millions of dollars in savings easily. Now, losing out to the Cherry deal is going to sting because, like CATL, it's a done deal. Cherry is one of the top selling car brands in Russia. Thanks to Western automakers pulling out, Cherry is now on top, which means as Russia continues to grow its economy, more Russians will buy car from the Chinese company. Investors are not blind, so we can expect this IPO to be another slam dunk. And while US banks are leading in terms of market cap, it's important to measure size by assets under management as well. Comparing the world's largest banks by assets, the top five are dominated by Chinese institutions. We have ICBC, China Construction, Agricultural Bank of China, and Bank of China. Only then do we get to JP Morgan in fifth place. To be sure, regulating banks when it comes to risk taking makes sense. You don't want another '08 mortgage crisis. But when it comes to facilitating trade and giving services, this isn't a good idea. Can you really be called a global bank if your services starts to decouple from the Chinese market? This looks very bad. America's financial game is starting to crack. However, there's an even bigger gaping hole when it comes to US trade policy. A ton of industry titans are pulling away forward guidance for their earnings. They simply have no idea what Trump has in store for them. They are living day to day, hour by hour, which is horrific for the US economy. Ford CEO Jim Farley is expecting Trump's tariffs to be in place for at least the next 3 years. And let me translate that. US consumers will be facing a world of higher prices for the next 36 months. As a result, consumption is about to plummet, and don't expect things to get better. The White House keeps telling us that the US is discussing with hundreds of countries. Or was it 90 deals in 90 days? I can't keep track anymore. But make no mistake, until we get some clarity between the US and China trade war, everything else is just a sideshow. A trade embargo isn't good for the US or China, but it damages US industries more. Has the US called China yet? Well, it's an absolute clown show. Scott Bessent just confirmed everything is still in limbo.
As I've said before, there are 18 very important trading relationships. We are currently negotiating with 17 of those trading partners. China, we have not engaged in negotiations with as of yet. I expect that we can see a substantial reduction in the tariffs that we are being charged, as well as non-tariff barriers, currency manipulation, and the subsidies of both labor and capital investment. So that is proceeding very well.
So finally, under oath, Bessent told the truth. No negotiations with China as of yet. The cat is out of the bag. And that's why we simply can't take the economy or US statements seriously anymore. Has Trump been stringing us all along? Or is he treating this as a really funny game? I have no idea anymore. Now, Bessent expects countries to drop their tariffs on the US, but will he do the same? That's the only way to truly lower costs for both the consumer and US companies as well. And we have to get something straight. China's exporters are not hurting much. We can expect the US to cave because Beijing is in no hurry at all. China's trade flow is still resilient even after the crazy 145% tariff imposed by Trump. Chinese ports processed 6.7 million containers in 7 days. It's an increase of 7% from a year earlier. Trade is booming like never before. Imports and exports are still flowing through the Chinese economy. China has diversified their trade flows away from the US. They are selling more to Europe, Asia, and the Middle East and Latin America. And thanks to Trump's tariffs, everyone in the world feels poorer now. So buying affordable goods is top of mind. And which country in the world still exports deflation? It's China. And this is the big difference in the economic war. China still gets business because their cost of production is low. In contrast, this is the exact opposite for US industries. Thanks to the tariffs, they are importing inflation in, which makes them uncompetitive. But yet, there are still no trade deals being done. Lutnick's epic delay is destroying US companies.
A top 10 economy, it's not fun. So, of course, it's going to be a top 10
That narrows
economy.
it.
What's that?
A top 10 economy from Asia?
Listen, the Asian markets are very complex. And there's a lot of talking to do, right? To get these things right, you've got to do a lot of talking. Now, we've only got 90 days and we only got 60 left. So these things are coming. But you got to be patient. Now, we're going to get some deals done pretty soon. The president will decide when he announces it because, remember, I'm his commerce secretary. I do the work. But the boss, and you know the boss as well as anybody in the world.
I do.
And this is his deal to make.
But I'm told.
And his deal to do.
No, I appreciate that.
Now, this is now a comedy show. It's crazy, but only with B-rate actors. Except the economy implodes if things go wrong. Everyone wants the China deal to at least start meaningful talks, but Beijing has laid out the terms of engagement. The US has to lower their tariffs first before a meaningful conversation can begin. There's simply no way to reshore critical industries, especially when the majority of your inputs comes from China. And according to Bank of America, the cost of making an iPhone in the US will raise prices by 90%. And that will be passed down to the consumer, and I bet the majority of which would simply not buy. And this isn't just isolated to high-tech gadgets. Even making everyday products is going to cost much more. Mattel, one of the biggest toy companies in the world, just destroyed Trump's narrative. It's a wake-up call that the tariff war is not working. Toy manufacturing will not come back to the US, but what will be coming to America are price hikes. And this next part is extremely important for everyone to really understand.
But if the tariffs come and they stay, would it be cheaper to manufacture toys in the United States?
We don't see that happening. We believe that production in other countries where we can be efficient and more productive is the best balance between manufacturing in international outside of the U.S. and continue to develop product in terms of design and creativity in America.
The toy industry has pushed for exemptions from the tariffs. The president basically used toys as an example, though, that kids can have 2 dolls instead of 30 or even more than that. So it doesn't sound like that's in the working. Have you had conversations with the administration about this?
Look, the 80% of toy production globally does happen in China. We do support the Toy Association advocacy for zero tariffs on toys to ensure that safe and affordable products remain accessible to everyone, given that toys are such an essential part of children's lives. We need to remember that a significant part of toy creation happens in America. Design, development, product engineering, brand management, all happens in America. Producing product in other countries allows us to create quality product at affordable price points. And this is something we are committed to do, to continue to create quality product and find the right balance of price and value.
The message is loud and clear. 80% of toy production is in China because making it there is simply affordable. The US should focus on the design, the product engineering, and brand marketing, and all these are high-margin activities. And that's why it's so bizarre why Trump is scrambling to bring home all these lower-value jobs. But let me know what you think. Will more Chinese companies shun American banks? And who will cave first in the US-China trade talks? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.